Ladies and gentlemen, we have a few things to look into today. We have the correction going on Bitcoin. A few days ago on this YouTube channel, in fact, 3 days ago, right here where I'm circling my cursor, we made reference to this ascending wedge formation. We said it would be likely to break to the downside, and we said the first target for that breakdown would be 63.8K. You can go back and fact check me there. We are right now sitting right on top at 63.8K. So now the question is, well, where do I think we're going to bottom? Do I think we're going to bottom here, or is that just a target? That's what I'll get into today. Looking into Bitcoin, looking into Ethereum in a similar situation, looking into the correlation between Bitcoin and the S&P 500. Perhaps that correlation is returning with this drop. So this drop could actually be good news, disguised as bad news. We're looking into the macro bear case, which I disagree with, but we need to be aware of the threat so we know how to react to it if it does occur. And then we'll look into quite good stuff that's happening on the weekly chart, right? We've got a hash ribbons trigger, which is great. We haven't done a trigger for about a year, and these triggers have been historically very, very accurate. So we'll get into that as well. And then finally, we will dive into my bull market invalidation level. So quite a few things to look into, but I'll skip through them quite quickly because they're not really too in-depth individually. So guys, without further ado, let's check out the exchanges and then get into the video, right? BingX and Bitfinex are our advertised exchanges on this YouTube channel. They are both global non-KYC. They have both never been hacked before, so historically very safe exchanges. And with my referral link down below, you will get a 15% trading fee discount for life on every single buy and sell you make. If you sign up using my referral link, every single buy and sell, 15% trading fee discount. You can save literally thousands of dollars there, depending on how much you trade. And the last thing is you can get a 5,500 USDT bonus on Bitfinex and 4,000 USDT bonus on BingX for using my link down below. Potential chance to win those bonuses and USDT rewards. So that's big stuff as well. No real reason why you shouldn't sign up to those exchanges. I mean, obviously I'm a biased source, but you can do what you want. Links are down below. Check them out, guys. Let's get into the content. So what has happened during this correction? Well, there's a very important thing that's happened on a medium-term scale, but we'll get into the shorter-term stuff first. First and foremost, as I mentioned, we broke down from an ascending wedge formation. It was at a very sharp ascending wedge. It was very necessary we broke down from it. It was unsustainable. We were reaching the apex point. There was a very small chance we're breaking up to the upside with a trajectory that sharp. So I predicted the breakdown occurred. We can go ahead and delete that wedge because it's not relevant anymore. Then what we did as well, which surprised a few people in this space, we broke down from this support line right here, which was quite strong on a shorter term basis. I didn't speak about that because I was too busy discussing long term, but am I surprised we broke down from it? No, because I predicted upon the wedge breakdown we go to 63.8 at a minimum, right? So I'm not surprised we broke down from that line. That is a line we could perhaps keep because we might actually test it for resistance on the move back upwards, but I'm going to delete it for now, just to keep the charts very clear. A big thing we did on this drop, and it's quite an unfortunate thing, but I think it was necessary given how overexhausted we were and how close we were to the support zone. For us to see any meaningful correction, we needed to kind of drop below this mid-range level. So this mid-range level, which has been a defining price range for Bitcoin for the last 3 months, right? Since April. I'm going to circle a few times. We've tested this level and it's held and led to quite major disturbances in price action. Well, right now, unfortunately, and this one right here and the support retest, it's been quite major. Unfortunately now, with the jump above it and then jump right back down below it, with no real significant, clearly defined retest, we have almost kind of destroyed the validity of the level. I'm going to leave it in there because I don't think we can just discount it entirely, but it does make the level a little bit more prevalent. So that's a little bit unfortunate because we like to have clearly defined levels in the charts, and when we lose clear definition of levels, we kind of lose predictability. So that's a little bit unfortunate we did that, but I think it was necessary, and as I said, I did predict that would occur. So we can't really be too sad about it. And now what I'm looking at here is this support range. And the reason I'm looking at this support range between these two horizontal red lines, 62.5K and 63.8K, is because this is clearly the structural support zone on a shorter term basis. So you look at the foundations of this move, you go back to these wicks right here, right? On the 21st of June, the downside retest for support, we dropped below that level. And when we dropped below it, the upside retest for resistance were on the 62.5K zone. Once we broke 62.5K, we held it for support while retesting 63.8. That clearly defined 63.8 63.8 and 62.5 as interjoined resistance and support levels. And even on the way upwards properly, you can see flipping 62.5, coming back down, testing on 63.8 on multiple occasions, and then getting above it. So right now, it's really not surprising to me at all that these levels are acting as support, because they are the foundational support zones, the base through which we saw this leg to the upside up to 68k. So I believe that these levels are quite likely that we see the bottom in. Am I overly confident? I can't be, because they're not mid-range levels, right? So confidence when it comes to bottoms and tops, even on a medium-term basis or a short-term basis, whatever the basis is, comes from the larger macro structural level. So if we were doing bullish absorption on a major structural level like this one down here, even on the mid-range level, or major bearish exhaustion on the macro level, then you can have a confident prediction. But since we are in an inter-range level, kind of a minor level in the grand scheme of things, you can't really have much confidence, but you can say, okay, it is probable, right? You can't be like jumping into longs left, right, and center. That's just not rational, because there's not enough evidence. But you can be saying, okay, this is probably the bottom, right? And if it's not, that's when we enter a bit of a danger zone, because then we have a rounding top formation, which of course is not a good thing to have. So ideally, we see the bottom between 62.5k and 63.8k here. We are still seeing bullish absorption in the RSI. I know we've broke down from an RSI channel. That's a bit unfortunate, but we are seeing lower lows in the RSI with higher lows in the price chart still. So there is bullish absorption going on. It's not like this price action is bearish. It's actually, there's an argument to be made really that it's not bad at all, because what we are seeing now, and as I've said multiple times in previous videos, one of the problems with Bitcoin in the last 2 months that led us to go from 73k down to 53k, quite an exacerbated correction that not many people expected at all, really, no one, to be frank. You know, one of the problems has been the S&P 500 correlation to Bitcoin has not only gone away, but it's reversed. So this is abnormal. You look at the orange lines right here. This is the Bitcoin chart. The white lines are the S&P 500 chart. Historically, they've been very, very connected. Now, in the last month or 2 months now, we've seen not only a decorrelation, which we saw back here. It's not uncommon to see a decorrelation, but reverse correlations are extremely uncommon. Like, we barely ever see it. We saw it here during ETFs for like 3 weeks. That's about it, right? You go back further, you're looking in years in the past, right? So a strong reverse correlation lasting a long period of time, Bitcoin tanking, S&P blasting to new all-time highs. And now finally, on this correction, it seems there is some stability maintained or stability found with these correlations, because the S&P has just gone down, this is my theory, so much. It's gone down 3%, 4% in the last 2 days that Bitcoin just couldn't possibly maintain the decorrelation. That's my theory personally. And hopefully, now that this correlation has been reestablished on a shorter term basis, hopefully it persists and we see a reconnection on the long term basis. Now, that would be great, because that means that the traditional metrics which drive Bitcoin to the upside reestablish, and we don't have to get worried about something abnormal happening anymore, like what happened during the drop from 61k to 53k. That was an abnormal move because it happened in an abnormal market environment. Right, the usual metrics that moved Bitcoin price action were actually flipped to the opposite. We weren't seeing them occur. And so it was completely unpredictable, this drop down to 53k. That's the simple reality. It was unpredictable because everything that normally moved Bitcoin was doing the exact opposite, right? And you can't predict something like that. And you also don't know when it's going to end. That's been the problem fundamentally. Like, this reverse correlation, cool, it happens occasionally, but the problem is you don't know when the reverse correlation is going to end. So you don't know when we're going to go back to being normal in market environment wise. So now that we have potentially reestablished a relationship with Bitcoin and the S&P, the threat kind of re-emerges. What is the threat? Well, the threat is that in orange we've got interest rates, in white we've got the S&P price action. The threat is when interest rates start to decrease, we might see Bitcoin and the S&P 500 tank into a bear market. Now, this is a threat which I don't take massively seriously. I take it seriously, right? That's the wrong word. I take it seriously, but I don't think it's provable. I don't think there's a lot of evidence for it. We look at the data points for this, right? So in 2008, interest rates drop, S&P goes into bear market. Same thing in the dot-com bubble, right? Interest rates drop, S&P 500 goes into a bear market. People are looking at the situation now and they're seeing interest rates flatline and they're thinking, okay, the same thing's going to happen. The interest rate's going to drop and the S&P is going to go into a bear market. Now, it could happen, right? That is the macro threat. I can't disprove it. It could happen, certainly. But it also easily could not happen because there's many problems with this theory. Problem one, it's not a trend. There is only 2 data points suggesting this could occur. 3 data points makes a mathematical trend. Problem 2, they are ignoring the data point which happened most recently, which was 2019, in which no bear market occurred. The COVID drop happened 8 months after the rate drops occurred. It was not connected to the rate drops as a black swan event. So that's problem 2, they're ignoring a data point. Problem 3, they're ignoring all the data points before 2000, right? So all these data points back here from the 1900s, they're ignoring. And problem 4 is we have a unique market environment now. I'm not just saying that, we actually do. Interest rates rose for the first time during a bear market. That's never happened before. Interest rates do not go up during a bear market, at least not for decades. So that's a unique issue as well. So my thing is like, yeah, okay, this could happen. We could see the bear market occur when rates drop. I can't disprove it. It certainly could occur. I wouldn't even say it's particularly unlikely, but what I would say is that it's unprovable. It's not a trend. It's not a thing that's happened on a regular basis. It's happened on 2 occasions ever, basically. And people are pointing those 2 occasions, they're being like, oh yeah, that's gospel, it's going to happen again. It simply doesn't make sense. But could it happen? Yes. And that is the threat right now. Because if we reestablish this link between Bitcoin and the S&P, that means that Bitcoin is in a way subject to the whims of traditional markets. And if traditional markets have this threat on their doorstep, that when interest rates drop, they could go downwards, so does Bitcoin. So I'm not discounting it at all. But what I am saying is we need to remain more reactive rather than predictive, because we can't predict something like this. There's not enough evidence to predict it. So in being reactive, we have to identify a level which, if it is lost, we need to get the hell out of the market. For me personally, that level is this yellow ascending support line. And the reason that is the level for me is because that's the level that led to the bottom, right? The irrational move to the downside to 53K, the bottom of that irrational move was 53K, which was on top of this yellow ascending support line. Therefore, if we drop that yellow ascending support line, I don't really see a reason to continue holding, right? I see that as a pretty strong bottoming zone. So if this ascending support line drops, that is my sign to get the hell out of the markets in general. Would I sell before then? Probably. I might actually even do that, because by then we'd be down very significantly. But that would be like the final resort level for me. Just seeing as that's the level we bottomed out on before. We wouldn't want to be making a lower low again. There's no reason to. If we made a higher high on that level, it would be very abnormal still. But it would be fine from a macro structural level. So that's like the final cutoff zone for me, just so you know, because obviously if we have a macro threat like this, regardless of how provable it is, regardless of how supported it is by evidence, we have to have a reaction zone to that macro threat. We can't just like blindly hold like idiots, right? Okay, guys, I think we're going to leave that hash ribbon analysis for tomorrow. That probably is deserving of its own video. So get ready for that video tomorrow. Quite exciting stuff occurring there. But we've covered quite a lot. We've covered the Bitcoin short-term correction, same with Ethereum. We've covered the potential reconnection between Bitcoin and S&P correlations. We've kind of covered the macro threat, the likelihood of it playing out, how we can kind of de-risk if it does play out, which is using that ascending support line at the latest cutoff point. Now, obviously, we're going to have cutoff points before that because we'll be down a lot of money by then. And yeah, that's about it. So guys, thank you for watching. Hope you enjoyed. I hope you found it useful as well. Go ahead and check out our VIP group on Telegram. We trade altcoins 4 times a week on VIP. We have a 78.39% win rate in a fully transparent trading results document. Not many people are sharing their trading results in a transparent, open way. I do, because I believe it's an important part of business, being transparent. So go ahead and check that out if you're interested. You're also getting access to a group chat if you sign up, not only signals, but a group chat as well. So check it out. Again, going back to the exchanges, BingX, Bitunix, 15% trading fee discount down below with my referral link. Get those discounts, get on a good exchange. All the information's there. And finally, a sale for the Become a Trader 10-unit course is currently running. If you want to learn how to trade for yourself, you want to learn how to do TA, FA, you want to learn market psychology, all of these things that you need to become a professional trader, you can do this course. It's a university-style course. It's 30 hours of content. It's not just like, oh, here's 3 hours of YouTube videos. No, it's 30 hours of content, a structured course for verbal, visual, practical learners. Everything you want is there. Check it out. Guys, thank you for watching. Hope you enjoyed. I'll catch you tomorrow. Cheers.